Good morning, Emily. Thanks for joining me again. Fantastic to have you here for another one of these sessions, which our clients always find really interesting. Today, we're going to talk about India, and you're obviously here representing JPMorgan Indian Investment Trust. So I want to start with the macro story for India because it's such an exciting country. We hear a lot about it. Where does India sit in terms of its population, size and growth, the size of the economy, particularly in comparison to China?
Well, first of all, thank you for having me as always. And you're right, India is incredibly dynamic. It's a very vibrant country. It's a country that actually recently overtook China to become the most populated country across the world. So just over 1.4 billion people. And that's clearly the bedrock of the story that we see for India going forward. You make a comparison with China, which I think is exactly the right one to make given the size of the populations. But I think it can be slightly dangerous, and I'd almost suggest an element of caution around making very clear similarities. So just as an example, the GDP per capita in India today is around 2,000 US dollars, which is about where China was back in 2007. Now, from that period, from 2007 in China, you saw their economy almost double in size over a fairly short period of time. I don't think we're suggesting the exact same thing will happen with India, but we clearly see huge amounts of growth by way of the GDP per capita and ultimately the size of their economy over the next decade. So it's a very exciting time for India, that's very fair to say.
Interesting. So what is it about India that you think makes it such an exciting long-term opportunity? Obviously, you've got the population, but what else is it about the political dynamics or the structure of the economy, or what attracts you to this country?
So I think there are a number of what you could term secular long-term trends that are really going to help provide this supportive environment for India going forward. The first of which is just pure economic growth, right? It's still a market that versus the rest of the world offers us some very attractive growth rates. And that's clearly positive for the corporates and the businesses that operate there. I think rising consumer spending. So essentially that emergence of the middle class. So you've got the 1.4 billion people who over time will get richer, who will have more disposable income and more choices on where to spend that money. Almost as an offshoot of that, you've got increased financial penetration, as we call it. So again, as people have more money, they start to use more financial services and financial products. So taking out loans, maybe one day having a mortgage, even things like credit cards. For a market of 1.4 billion people, it's somewhat surprising there are only 65 million credit card holders today. So you can see financial services can be a big growth area. And then finally, an area that's been more in the headlines of late that I would term almost offshoring or increased manufacturing. You may well have read how Apple are looking to move a lot of the production of the iPhone from China to India. And again, that's just one example of where we see that happening. So I think across the board, you can see both financial and also people-led initiatives that over time we see as a very supportive driver behind India looking ahead.
Interesting. When you think about emerging economies or developing economies, they're always risky and volatile at times, more so than many developed markets. So when you think about India and where it sits on that risk spectrum, where would you put it? How does it rank to some of the other emerging or developing markets out there in terms of the risk profile?
I think you're exactly right in the sense that we have to remember there is going to be increased risk and volatility from these markets. They're still called emerging markets for very good reason. But I guess if we take a step back and think about where do we see risks across the emerging world today, many of them center around geopolitics. And that's one area that you would argue India is at the lower end of the spectrum. It's far more of a closed economy, far more of a closed market, especially with regard to its interaction and its tensions with other markets globally. So I think that is something that we can be slightly more comforted by. The other area that you do clearly see risk, and this is both across emerging and developed markets right now, is around higher inflation, higher interest rates, more pressure from an economic standpoint. And again, with that, I think we can draw a degree of comfort from the fact that the Indian central bank have got room for manoeuvre by way of cutting rates. Along with so many emerging markets, the Indian central bank almost hiked ahead of time, so ahead of the likes of the Federal Reserve and the ECB and so on. And they're now in a position to start to cut rates to once again provide that support. So risks will always be associated with an economy such as India. But I think right now we're at a level where they're more contained and maybe look more attractive to some of the other markets in our emerging universe.
Tell me about the Indian share market itself, because that's obviously the universe of companies that you have to choose from when you're investing in India. How big is the market? Are there any sectors that tend to dominate the share market? Every share market has its nuances. So what are those that we see in India?
So India is around 12-13% of MSCI emerging markets. So when we look across emerging markets, it's clearly a decent component of it. And what I would say is it's a fairly diversified market from a sector perspective versus some of its Asian counterparts. You often tend to find with markets that there are certain tilts and biases in different directions. In India, there are a number of different areas that we find as very attractive investment opportunities, all of which have as a decent weighting within that universe. So if I think about where we see a lot of opportunity, the likes of consumer, the likes of banking, healthcare, it's a market that for us as long-term investors, we've actually had long-standing overweights in from both an Asian context and a global emerging markets context, which to me highlights how attractive that we see it. I would always say we still believe you want to be stock pickers, you want to be active, but even within that stock picking ability, as I said, unsurprisingly, a number of the sectors where we do, I guess, get drawn towards are connected to the people, i.e. those 1.4 billion people, more money in their back pocket, and where are they choosing to spend that money?
And when you're seeking out those investments in a market like India, how important is it that you've got people on the ground, links into the economy, those sorts of things? I can imagine, for us sitting here in New Zealand, it'd be near impossible for us to figure out which stocks we should own. So how are you and the team making sure that you make those judgments correctly?
You really hit the nail on the head. I think it's so important that you have people who understand the market, who speak the languages, who know the history in many cases behind a lot of these corporates. And also, I think what's so important from an emerging market context is understanding the impact of politics and the impact of regulation on businesses' ability to succeed, essentially. So I think our team, of which we have one of the largest teams in the industry, we have coverage of over 120, 130 stocks within India today, and that's an area that we're looking to grow into even further, all the way through from small caps through to large caps. That gives us the right opportunity to differentiate between the winners and the losers. And at the heart of it is ultimately about building up trust in management. It's about being able to look across the table from the management, who ultimately are just a senior employee, and feel comfortable that they are making the right decisions for all of our shareholders and all of our clients. And that's something that clearly we're thoroughly enjoying getting back to and being able to travel freely and be on the ground again. And it's a lot more than just looking at numbers on a spreadsheet or numbers on a computer screen. So I think that the team and the resource and the ability to really drill deep, and as I said, build up trust and build up confidence is at the heart of what we're trying to do.
Yeah, I can imagine that's crucial. I would think. So, which sectors of the market do you like at the moment? How are you feeling about the Indian share market? Which parts of the market are you most comfortable with?
So right now, and again, there's no massive change in this for anything that I've just answered over the last 10 minutes or so. The consumer is quite rightly at the heart of what we're trying to do. It's such a clear multi-decade trend for us to be able to buy into, but it really is about finding the right type of businesses. So one of the companies that's actually one of the largest positions in the India Trust today is a company called Hindustan Unilever. Again, many of you will be familiar with the Unilever brand, and they run so many household names across India and actually across the world. So the likes of Dove and Sif and Lipton. There is a statistic that I think really highlights why we like this company, in that 9 out of 10 product from Hindustan Unilever on a regular basis. One of the great things that they've done over the last couple of decades is almost build a very strong product pyramid, in the sense that when you start to earn more money, you aspire to buy the next branded good that they offer, all the way from, you could argue, your own brands through to your medium brands, through to your real premium brands that you feel proud to put out in front of your neighbours and your friends and family. And so this is a really typical long-standing consumer business. It's been running for over 100 years. They've made also great strides from an ESG standpoint, and sort of targeted when they want to be net zero, and really focus on all of the outputs as well as what they're selling. So that's just your really typical long-term buy and hold. I think the one caveat I would always make with India when you ask about where we are is it can be fairly expensive. As a market, it can always look quite rich, which is exactly why we believe you want to be long-term. So you can buy and hold and compound your return and almost look through how much you're paying, because over time that really softens. The other areas that we really like are in the financial space, banks in particular. And this is where we see a real split between what we like and what we don't like. What we don't like are the state-owned banks. So your incumbent government-run banks, where there are loads of people, but also loads of bureaucracy, and companies who seem quite unwilling to adapt to the latest technology. In contrast, the private sector banks that we do like have embraced technology. You can do everything you want on your banking app, on your smartphone. You can take money out of an ATM with a thumbprint. All of these things that make life easier and encourage people to use their financial products. And then I guess the final area to touch on is healthcare, that we like. When you find emerging markets that are still going through their development stage, healthcare is quite a small portion of the market. The population don't really have the money to spend on it, but as their disposable income, as their GDP per capita increases, so too does their ability to invest in their own health and the health of their family. And clearly within that, you get medical services, you get diagnostic testing, medical equipment, and so on. So some really fantastic, not just multi-year, but multi-decade trends that we see leading us into where we invest in India.
On the other side of the coin, are there any areas across the market that you're particularly cautious on, or maybe avoiding at the moment?
Yes, there always will be as stock selectors. I guess one way to think of it is, when we look for businesses that we hold in the India Trust, we want businesses that have strong balance sheets, that have barriers to entry, i.e. a competitive advantage, and want high quality management. So as a result, any company that has the opposite of that, we're naturally going to be cautious on. So I touched on public sector banking. There are also going to be areas where it's highly capital intensive and they just don't really have the economics. So areas in the commodities space, areas in utilities, for example. For us, it's very much about the quality of the business. And as a result, it is building up that trust in management to be doing the right thing. You want companies that can be adaptable to new technology, but without overreaching and overspending. So I think with all of it, you have to really have an ability to look at every company from a level playing field and say, look, does this have the right characteristics? But naturally, there are going to be some sectors that are far more attractive that we lean into. So as I said, most things around the consumer area, but also those that we lean away from, typically anything associated with commodities, natural resources, utilities, and so on. So it's a fantastic pool for us to fish in. I think our main job is to really go in with our eyes open and ensure that we keep trying to make the right decision for all of our clients and investors.
Excellent, excellent. I'll just wrap up on this final point. When I hear you sort of talk about all of these things about India, fantastic growth story ahead of it, 12 or 13% of the emerging markets index. It's got a favourable political landscape, which puts it at a lower end of the risk spectrum, and with a bigger population than China these days. I think that'd probably surprise a few people who might not have known that. So if you're a long-term investor and you're trying to get a piece of every corner of the world, in particular the quite exciting ones, you know, you'd almost say that we can't really afford to ignore India, can we?
Totally. Yeah. I think the key with all of this is to have the right time frame, because you do get volatility across these markets. We've seen that in the last few years. But for long-term investors, this is a market that nearly 20% of the world's population lives and works and spends in. So I think you at least need to be considering, how do I gain some form of India exposure from a long-term portfolio perspective?
Yeah, that's fantastic. All right, thanks very much, Emily. As always, really fascinating to hear your thoughts. I've learned a lot. I'm sure those viewing the video will have learned a lot. So I need to get off to bed, and it's morning where you are, so I'm sure you want to get on with your day and get your second or third coffee of the day in. So much appreciated. Thanks for your time, and we'll talk again soon.
Thanks, Mark. Take care.